This is John. Welcome back. This is the second video, and we're going to look at assets, current assets and non-current assets. Assets are resources controlled by the business that will generate future benefits or profits. So, controlled, resource controlled by the business. They belong to the business and they're going to generate future benefits or profits. I'm always, not always, often asked this question: are employees assets? Okay, think about that for a second and look at the definition. Are employees assets? Okay, do we control them and will they generate future benefits or profits? Well, they will generate future benefits or profits, but does a company or a business control their employees? No. Employees can leave. We don't control them. Exception to this, professional footballers or musicians who are contracted to a club or a music label. They cannot leave. They've signed a legal document saying they will exclusively work for this club or record label. They can leave, but they would have to pay to leave. Okay, so it's quite complicated. Okay, two very important definitions of assets. A current asset, an asset that will not exist in 1 year. Okay? And a non-current asset are assets that will exist in more than 1 year. Two very important definitions. The dividing point is 1 year. Okay? Current assets will not exist in 1 year. Non-current assets will exist in 1 year. So, starting off with current assets. Examples, again, these are short-term, assets. They will not exist in 1 year. Cash, bank balances, cash, and highly liquid financial assets. For example, you've got a short-term investment that will mature in 3 months, i.e. in 3 months you will receive your money back. Okay, that's considered highly liquid and could be included in cash. For example, a government bond that will mature in 3 months. Some countries on the balance sheet, instead of seeing cash, you might see bank. Okay, just exactly the same thing, just different vocabulary. Now, you might ask, why is cash a current short-term asset? We will have cash in 1 year, 2 years, 3 years. In the future, we will always have cash. So why is cash not a long-term asset? Why do we consider it current and not non-current? And the answer is we will have cash in the future, but it will be cash arising from different economic transactions. Cash is always money in, money out, money in, money out. We make a sale, we get cash. We buy something, we pay cash out, okay? So we will have cash in the future, but from a completely different set of economic transactions, okay? So that's why we consider cash to be a current short-term asset, a current asset. Okay, accounts receivable. This is another item that we find in the category of assets. Accounts receivable, here's the definition: the legal right to receive compensation, usually money, in the future as a result of a product or service provided in the past. So, very, very common in B2B, business to business transactions. One company or business sells to another company or business, okay? And it's very common to make a sale and receive payment at a future date. Okay, here's the product, here's the service, yeah, pay me later, okay? So how long do we wait to receive payment? It depends on the country and the business culture, okay? Every country is different. So for example, in Britain and the USA, 60 days is the normal period. Normally with B2B, business to business transactions, you make a sale, you've got to wait 2 months to receive payment. And during that 2 months, that's 60 days, on your balance sheet, you will have accounts receivable. You've got a legal right to receive that money in the future arising from a past product or service being provided. When we receive the cash, the receivable will disappear and will be replaced by the cash. In Scandinavian countries, 30 days is more common. In southern European countries, 90 to 120 days is common. Okay, it depends on the country. Okay, another type of current asset. Okay, inventory. This is a product held with the intention to resell as part of the normal operating activities of the business. We have a physical product. What do we want to do with it? We want to sell it. And here, merchandise inventory, product that you buy, put it on display, and sell it at a higher price. Think your supermarket. They don't make the product they sell. They buy the product, they put it on their shelves, and then they sell it. Okay, your normal supermarket. Okay, or Amazon. Okay, you buy online, Amazon. Okay, they didn't make the product, they just have it available for sale. Another type of inventory will be raw materials. Don't worry about it yet, just be aware it exists. A manufacturer makes a product from raw materials, so we might have a raw materials inventory. Okay, and this is the management accounting video. That'll be in the future, we'll have a video on it. An assembler combines sub-products into a main product. Think your computer and all the boards, all the chips and all the wiring, etc., that are arrived to a factory as separate products and are assembled. In financial accounting, we will assume we are dealing with merchandise inventory. Now, for example, sometimes it's not very clear. If BMW have cars, that's inventory, as that is their normal operating activity. If Microsoft have cars, it is not inventory, as selling cars is not their normal operating activity. Look at the definition. Product held with the intention to resell as part of the normal operating activities of the business. Okay, so in this case, Microsoft, it is not their normal activity to sell cars. Therefore, any cars they have is not inventory. We'll see it in a few minutes. It's called PPE. Okay, it's a non-current asset, property, plant, and equipment. And the last non-current asset we're going to look at, okay, prepaid expenses. Okay, is an expense that has been paid for in advance of incurring or using it. It's very common, okay, to prepay some types of expenses. Can you think of any? For example, insurance. You must pay insurance in advance to have coverage. Okay, if you don't, you crash your car, you've got no coverage. Okay, you cannot say, I will buy my insurance next week. It doesn't work like that. Okay, you want insurance, you must pay in advance. As time passes, the prepayment becomes an expense as you use the insurance. Month one, I've been insured this month, I now have consumed 1 month of insurance. Travel and accommodation. These are almost always paid in advance and will convert into an expense when we make the journey or stay in the hotel. Membership. Memberships are paid in advance and convert to an expense as time passes. Again, we all know, we've all paid memberships, okay, for a year in advance, which is the normal. And then as each month passes, that 1 month of membership becomes a cost or expense because we've used it. Education. Courses normally have to be paid for in advance, either the entire course or term by term. Non-current assets, long-term assets, they will exist in 1 year. Okay, very common tangible non-current assets include items such as machinery, equipment, motor vehicles, and property. We group tangible non-current assets on the balance sheet as PPE. We put them all together, machinery, equipment, cars, property, buildings, whatever, we put them all together on the balance sheet, one item called PPE, property, plant, and equipment. There's also some types of non-current intangible assets. We cannot touch them, they have no physical existence. Okay, contracts, patents, trademarks, licenses. And also some financial non-current assets, okay, include investments in shares and bonds and other corporations. When we buy bonds or stocks or shares of other corporations, then this would be a financial asset and usually non-current. We're going to do a lot of detail here on non-current assets when we get to depreciation and amortization. It's a future topic. We will get there. Just for the moment, just be aware what is PPE. Okay, for the moment we're going to focus on PPE, machinery, equipment, motor vehicles, property, computers, any of these long-term assets that have a physical existence. So the life of PP assets, it varies depending on their type, depending on their condition, but approx machinery maybe is going to have a life of 8 years. Equipment maybe is going to have a life of 5, maybe 6 years. Again, this depends. It can vary. Property can have a life of 40, 50 years perhaps. And computers usually has a life of 2 to 3 years. Although maybe if it's a high-tech company where the most up-to-date computers are necessary and they're replaced every year, maybe they'll be an expense. Okay, thanks for watching. I hope you found the video useful. Please help the channel. Don't forget to click on like and subscribe to the channel, and see you in the next video. Thank you.